Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the June 15th, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hope you had a great weekend. Hey, let's make sure we have a terrific weekend. The easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much, much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on it at 877-927-6648. If you can't dial in, we've got you covered there too. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question in our Tiger's Den or our YouTube channel. Any ping will do. So let's go ahead and get this show started on magical, magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we've got a slightly mixed bag. All the indices are in the green, with the exception of the Dow. So just give it a few minutes. It's down 25 points. The S&P is up 2. The NASDAQ 100 up 24. The Russell up 22. Big day there. 1 0.6% to the upside. Trannies are up about 0.6% or 52 points. Spot volatility index still well above its 50-day exponential moving average. That is priced right now. The VIX is at 35.65. We'll look at the 50-day number. I don't recall what it is off the top of my head. Gold's off $11. Silver is down 6 pennies. Light sweet crude is up 45 cents. Natural gas is off a nickel. Just can't find a bottom. And the 30-year Treasury is up 8 ticks, trading out at 177.14. So let's begin the day for Robert B., who has an interest in silver. So Robert writes in and says, I don't currently have a position. I'm considering shorting silver. Would you want silver to close below 1736 for 2 consecutive days prior to taking a short position, or would you enter the trade right now? So let's begin by taking a look at high-ho silver. Let's do the following out here. Let's take a look at not this chart. Let's look at this chart. Let's take a look at 4 different time frames. Let's begin by doing that. Now, these 4 different time frames here, I'm multitasking if you can't tell. So I think that what Robert was referring to, so he gave you the price point of 1736. So first, let's take a look at where does the 1736 number come from. That is the panel number 2 from my right. That's the daily time frame. It may be difficult to see because of price and the bars that are up there. So if you look in the bottom little rectangular data box out here, you will see we've got TOP, top, CTR for center, and BOT for bottom. And if you look at the green highlighted BOT area, you'll see 17.366. So that is the support area for Robert. And the reason why Robert was asking 2 consecutive closes, because for me, 1 close underneath support is not really a breakdown. So, and when he wrote this email at 10:47, silver was still trading below that level. And now this is a bullish structured profile. So most certainly, Robert, right now, as of 1:10, the information, and we're always using the current information that we have. It's different at 10:47 than it is now. But I will answer his question as if it were 10:47, would I take the short? But first, just with regard to the bullish structured profile, you've got to see a couple of closes below that. We don't have that 17.366 out there. We don't have that. So now is certainly not the time to take the short. The short would be, because of the bullish structured profile, and I'm not saying this is going to happen here, Robert, but certainly the better short, would be up at the top of the profile at 1824. Now, Let's assume that price was trading at the low of the day. And your question was, do I have to wait for 2 bars or would you take the trade now? The way that we would answer that question is just a reward risk standpoint. Because if you're going to take a short in gold, in silver, because of its topping pattern and because now prices broken through, let's assume, would have broken through support, should you take that trade? Well, we have to go figure out where's the next level of support. That's the reason that I put up this chart here, Robert, because we can also take a look at the weekly time frame. And that's the panel on the very right-hand side. So the low of today was 1701. And we know that there's another support level at 1685. So now you're already helping me to answer your question, right? Would we have taken the short? No. Even if we had 2 days below 1736, would we have taken the short? No. Not knowing that on the weekly set of profiles, we've got support at 1685. So the answer to your question is on the short, other than a counter trend rally, we'll take a look at the intraday patterns out here to consider taking a short. But remember, you've got this strong support in the 1685 area. So and I'd have to say you need a really strong counter trend rally to make the reward risk for you. Now, the structure of the weekly profile is also slightly bullish in nature out here. So that 1685, 1736 is really our strong area. And then you've got one last figure, and I apologize for this, but it is what it is. And that last figure would be Stevie's red line. That's at 1679. That's on the weekly time frame. And that's really going to be the key level of support that the silver contract is going to need to get through to really get your risk reward going. That appetite, which would, I don't even have a support level out here on the weekly time frame to give to you. If I pull over the daily time frame, here's the my white background charts out here. Here's the other concern. Breakout support inside of silver is 1484. So if silver can close below those levels that we took a look at in the profiles, Robert, then I would say your real price target would be 1484, the breakout level out here. But with silver trading above the bottom of that daily profile, I think now is not the time. The counter trend rally based on the daily time frame would take you short between 1805 and 1824 out there. Now, if we look at the 30-minute time frame chart, we could look at any intraday time frame chart we wanted to. I'm just going to pull over, take a look at the 30, see if there's anything out here. There is. That is 1759. We're in bar number 7 of a potential TD9 count pattern. Don't know whether we'll get there or not, but 1759 is the breakdown level on the 30-minute time frame. Robert, I'm still going to suggest that you hold off on taking your short in silver to when the odds are better in your favor, and that better in your favor again is going to be between 1805 and 1824. Thanks for writing in. I hope that helps you out. Next question coming in from Tom G, and Tom writes in, says, "Good afternoon, Steve." Well, good afternoon, Tom. I was long the inverse of the S&P 500, so he was short. Sold that earlier today. I'm wondering your thoughts on the SPYs and maybe looking to go short again soon. So let's go take a look at the SPY and all of the other tools that we might need to interpret its message. We'll begin here while we've got about 10 seconds, and we go to a hard breakout here and take a look at those TAS market profiles. We talked about those for silver. Now what we're looking at is the daily time frame here for all 4 of our equity future contract, the ESYM and Russell 2000, all below the bottom of their daily profile, all suggesting a change in trend. The holdout here is the NQ. It's above 95.59. 95.59 is the bottom of its profile out there. We're right now at 96.90. So the Qs or the NQ can drag us up further, which then fits into Tom G's suggestion of maybe taking a long position. But we'll go take a look at the shorter term time frame. We'll get right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. My apology. I misspoke there. I said one thing, thinking the other. Tom is looking for, he was short. Sold that out, and he's looking to get short again. The question is, where, I guess, looking to go short. So let's go take a look at, I want to start with the daily time frame. We're going to do the ES Mini out here. This will be helpful, I think, both to myself and Tom and each of you out there. So I want to start with the bigger picture and move ourselves backward out here, and perhaps that'll help us out. So on the daily time frame, in a daily time frame for the ES Mini, here's what we know. We don't really have a valid topping signal out here in the ES Mini on a weekly time frame, and I really don't have like an A to B equals CD or a TD9 count pattern or wave number 7 or really anything other than just a retracement from high to low out here. We do know last week was a big old key reversal session. The prior week's high and low was exceeded, and you had a close in the opposite direction of the trend. But all that being said, what's more interesting, it's more important for Tom and each of you out there, is right now, it's only the beginning of the week. What we do know right now is price gapped down last night in the ES Mini and then continued to move lower through the early hours, and price found support or tested and then has since rejected 29.49.26. That is Stevie's weekly red line, the oscillator and change line out there. If we were trading below that, it gives us a whole different interpretation of the market. But at this stage here, a key level of support, and I do mean a key level support. Look at these other instances out here. Come back here to bar number 7 around December the 6th out here. You had nice push lower, but by day's end, price rejected. Now, that was a green line out there, and a green line and a red line, two totally different elements. The green line is bullish, and so staying above that just says that trend that's in place should continue. A red line says more of a retracement at this stage of the game. Still, nonetheless, you bounce off of it. Again, more of a retracement. That's the message right now from the weekly time frame. So let's go from the weekly now down to the daily. We already covered how price was trading below the bottom of the daily profile. Oh, it didn't change. That's okay. The contract is rolling over to September, so this could be confusing because you could take a look at this chart. I'm going to get rid of this chart right now and just come over here. And I didn't get a chance to change these out just yet. That's okay. Just make sure that you're focused on the June contract right now. So here's what we know about the June contract. The same applies to September. This formed a Gartley sell pattern or a sell the D point out here. Did it with this little dark cloud cover. And price is trading below the bottomless profile levels out here. Its price target is very likely 28.50. But at this stage here, the weekly says, hey, I've tested a key level of support. And so maybe I'm going to do a counter trend rally up to Stevie's green line on the daily time frame. That would be 31.64. So, Jay, you were throwing out a price levels of 30.45 to 30.50 out here. The daily, the number I would come up with is 31.25. But let's look at some other shorter term time frame charts, see what else we can see out here. But the daily is suggesting a counter trend rally up into Stevie's green line as a possibility. Let's take a look at the 5-hour time frame chart, see what we see. Now, in the 5-hour time frame chart, what we have out here is a Rhodes momentum indicator bottom. Now, at the highs, we had a Rhodes momentum indicator top. We also had a TD9 count pattern. It was this dark cloud cover-up candle that generated the Rhodes momentum indicator top out there. And now price has gone all the way, and at about 9 o'clock this morning is at, it's got to be 9, right? Was it 9? Yeah, 9 o'clock this morning, we had the bullish piercing candle. The piercing candle is the opposite. That's the bullish version of the dark cloud cover out there. Pierced more than halfway into the body of the prior candle. Now, the current bar closes at 2 p.m. And I don't know what the next 38 minutes is going to give to us. But as long as the ES Mini, Tom, stays above 30.23, that's Stevie's red line, then very likely price is going to make it up to 30.63. So, Jay, there's another number for you, closer to your 50 number, but 30.63.75, if we want to get exact out here, is the number where there could be resistance on the 5-hour time frame. That 5-hour box is pretty equally distributed, and so there's no edge here for bulls or bears, but I would watch that level. 30.87, oddly enough, which was the old breakdown level, that price, was able to break right through. If we take a look at that big rally at about going into 2 o'clock on Friday, price stopped right there. So sometimes old support can become resistance. So I would say you've got 30.63 to 30.87 if it was the 5-hour time frame, Jay, that we were focused on out here. And all of these numbers here that we're taking a look at, they really apply to Tom as well, as far as when would be the next opportunity to get in on a short position. If we take a look at the 2-hour time frame, we're also going to see a Rhodes momentum indicator bottom. Now, I pointed all of these bottoming patterns out to subscribers this morning. So you've got to ask yourself the question with regard to the value of newsletters and so forth. How valuable would it have been? Because at that stage, we were also taking a look at international markets and saying, the markets have not broken down, and they're off of the lows, and we've got these other patterns here. So here are the levels to watch. Well, on the 2-hour time frame chart, which also confirmed a Rhodes momentum indicator bottom pattern. Now this here, Jay, Tom, if this was going to be over, the counter trend rally, then we're in that range right now. And here we get closer to Jay's 30.50 level, because we can see that we have a bearish structured 2-hour time frame TAS market profile. We've got the confirmed bottom. The question is, and I don't know the answer to this, but is the 30.40 or 30.56 level an area of resistance? Now, I don't know that, but because prices traded up into these areas out here, which we go to the shorter term time frame, they may tell us something. There's your 30.56 level, Jay. And so to the extent that you want to take a short between here, this price, and 30.56, I can see it, and you'd have your stop, though, I would think has to be above. I need to get my crosshair. This candle right here, because this is the 10 o'clock session from Friday. And that high out here is 30.87.75. So that's a fairly large stop out there. But, I mean, you can use some other type of stop, obviously. But if price gets above 30.56, that's probably where it's headed to. At least that's where the next resistance level would be. But we can see bottoming signals on these multiple time frames, and they really help us. If we take a look at an hourly time frame, what do we see out here? We can see Rhodes momentum indicator bottom. Now, in this case, it's only in bar number 5 of a TD setup 9 count. Now, you can clearly see that this could also be setting up a Gartley sell. Now, the cool thing is we don't know what pattern, if any, is going to identify a top, but on a Gartley sell pattern, whoops, sorry about that. The Gartley sell pattern, it's really cool because all you do, all I do, is let the market communicate to us. If a Gartley sell pattern is going to form, we can see that we're already beyond the 1.272A to B equals CD. Price J here is on the left-hand side of the C to D leg. See, the angle of A to B here is exactly the same as angle of C to D on my chart. And what we now know, what you know and I know, is that this move off of the C point is stronger than that A to B leg. Stronger than the A to B leg. We're beyond the 1.272. What do you think the odds are that price gets up to the 1.618 A to B equals CD area? I'd say pretty good odds at this stage here. We haven't seen anything to suggest otherwise. There's your 3056 number again. But hey, Jay, because this is an hourly chart, if price gets up to that level, this applies to you too, Tom, wait for the bearish reversal candle to give you that Gartley sell, to then suggest that maybe there's a short-term top in place. Steve Rhodes with TFNN. That was basically your S&P 500 via the ES Mini. Great. Back in the day, I joined the Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back Folks, we're going to finish off the ES mini by taking a look at the 30-minute time frame out here. Here we can also see the A to B equals CD pattern. We can again notice here prices on the inside left of the C to D leg out here, prices above the 1.272 expansion. We also see a TD9 count pattern, Jay. So the TD9 count says, okay, there could be a top out here, but because this has the potential for a Gartley sell as well, I would wait for a bearish reversal candle before I would step in on the long trade. Now, we can see that Stevie's red line had turned green, so we should see price and that line catch up to each other. We don't know, is price going to drop to it? Is the price going to move sideways? The line's moving up? Whatever kind of combination there is. But we should see a test of that level occur over the coming sessions. That might take until early this evening. I don't know the time frame on it. But right now you've got a strong message out here. I'm suspect that this TD9 count will identify a top, Jay. And the reason is that if we look at the NQ 30-minute time frame, the NQ, as I'm sure you would also agree, has the power to help pull the markets up here. And it had already formed a TD9 count pattern. And it was just simply it was just not even a hiccup out here. And so it tells us about strong momentum that is underway. Not that this can't also form a Gartley sell pattern out here, but the TD9 count here failed. So it's just a little bit suspect. It's, again, the reason to wait for a bearish reversal candle, in my opinion, if you want to take that intraday short. So hopefully that helps everyone out. We've got plenty of other requests, 2, 4, 5, 6, 7 or so. We have a request inside the Tiger's Den to take a look at ticker symbol CRWD. As we take a look at it, the question is this forming a top out here? Now, on Friday, what this did was this generated a bearish reversal candle to confirm the Rhodes momentum indicator. Now, when we take a look at that, when we get a top, remember, all that tells us, so when you do the risk reward, it's incumbent upon you to go figure out where is support. Well, on a daily time frame for CRWD, that level is 87.66. So when you ask me the question, has this form a top? It has a topping signal. You do not have follow through today. When I get a bearish reversal candle, I'd like to see follow through. You don't have that today. But until price closes above 100.57, we're at 98 and change out here. 100.57 would say, no way is this a top. That's the top of the daily profile. So in the structure of this box is pretty much equal. Meaning it's not bearish or bullish in structure. The center pretty close to center. So that's all we know is there's sellers sitting at 100.57. But if crowd closes today above 97.50, that's Stevie's green line out here, this suggests that 100.57 should get tested. No idea whether it'll get taken out. But if it does get taken out, no way is this a top or a short position, at least not just yet. Now, if price were able to close below 87.66, then you would be looking for price to pull back to 67.81. That's its daily breakout level. On the weekly time frame chart, what do we have out here? Well, we've got a TD9 count top. We can see a couple weeks ago, it was the bar following bar number 9. It was right into the breakdown area of 101.88 out here. So certainly clear resistance at 101.88. That would be another level that I'd be watching, because if price closes over that on a weekly basis, that's telling you forget about the short, that crowd wants to continue to move higher out here. Not enough data on the monthly time frame for us to really use to interpret any other message for crowd strike. CRWD is the ticker symbol. We have a request to take a look at Tesla. This is for Addie, and Addie wants to just look at this one more time. So, Addie, I know that you're a long-term holder, and you're saying, hey, with all that is going on in and out of the market, I wonder, should you bail, considering how far this could go down? So, if we take a look at Tesla out here, here's what we know about this is the daily time frame for Tesla. So, what do we know? Well, right now, Addie, as long as Tesla continues to close above 875.34. 875.34 is the bottom of its bullish structure daily profile. If it's me, this is daily. You're an intermediate term trader, so I shouldn't even be looking at a daily chart with you, but we are, and we are because of your concern, and it's a valid concern, because if price did close for 2 bars below 875.34, the target Don't know whether it gets there, but the target is a long way down. It's 532.34. That's the price level that Tesla most recently broke out from. So 875.34, because it's a bullish structured profile, that's what I would put on my box, on my pad of paper out here. 2 closes below that. Then I would say the market has answered the question for you versus me. I really can't answer the question. All I can do is come take a look at the charts with you. Very easily identify support and resistance. Very easily identify, is there a top or bottom pattern in there? And then the point at which closes below on a long trade, say, you know what, this wants to go to some other lower prices and be able to provide you with those breakout areas. That's really what I can do. Right now, the way Tesla is trading today, as of 1:35 in the afternoon, the daily chart says no reason to sell. Doesn't mean you can't or shouldn't if you're uncomfortable. But the daily chart says, I don't see it. You're trading above Stevie's green line and the top of its daily profile. If we look at the weekly time frame, now the weekly time frame just gives you reason to pause. That pauses that TD9 count, the bar following bar number 9. But that says last week has to be the high. If there's a close above last week, well, then the weekly time frame is telling you Tesla wants to continue moving higher. On a weekly time frame, an intermediate term basis, you would need to see a close below 868.58. Let's call it 868, although that number is going to change if price were to pull back. But that's my green line level. As long as price is above that, the conditions are either bullish or neutral. They're certainly not bearish unless there was some type of compelling topping signal that we saw on another time frame like the daily, and we don't have that. So potential for a topping signal out here, absolutely. But do we have any confirmed message? We do not. So this says go ahead and stay with that position. And we switch over to the monthly time frame for you. On the monthly time frame, we also have the potential for a TD9 count, but this month is not over. So not until we really know the high of this month, which would then mark the resistance of that TD9 count pattern, would we have any kind of signal to be potentially be concerned with. So I caution. It's pretty simple. You've been in this long. You might have a nice profit. You've got some concern. The charts say your concern should be triggered if there's a close below 875.34. But hey, it's trading at 970 right now. Maybe you don't want to give up $100 a share out there. I get that, but that's the read. That's what the charts on Tesla for the daily, weekly, and monthly time frame are communicating to us. So I hope that helps you out, Addie. We have another question here coming from the Tiger's Den, this one from Ruby. Ruby wants to take a look at the Russell 2000. So very much like the ES Mini out here, Ruby, look at what price did here overnight. Price came right down and tested the weekly oscillator and change line. That's the red line. 1317 is the number. So there was a strong level of support that held out there. We pointed that out to subscribers this morning so that they understood that a key level of support had held. If we take a look at the daily time frame chart, what do we know? The daily time frame chart has wave number 7. That's letter G as a top. It's got a Gartley sell. Price is below Stevie's green line. That's 1447. That, Ruby, is likely where the counter trend rally would take us to, 1447 out here. But we get back from this break, let's go look at some of the shorter term time frame charts for the Russell 2000 equity futures contract. Dow off 53, S&P is flat. Be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So if we take a look at the 30-minute time frame chart out here for the Russell 2000, very similar to the ES Mini that we took a look at out here, which was, it formed bar number 8. May form a TD9 count. We can see the A to B equals CD pattern that is underway. Right now, this candle here is showing a bearish reversal candle, but it doesn't close for another 23 minutes out here at 2. So I don't know. Now, this could be generating a Ruby. This could be generating a Gartley sell signal, or at least a sell the D point. What we also know out here, and this is where it's going to be important. This is important for you, for Jay, for Tom, for anybody that's trading intraday or looking for some signals out here. Even if we do get a Gartley sell, we can also see that Stevie's red line, green line, changed colors, went from red to green. So what we know here, Ruby, is there's a phenomenon that takes place when the line changes color. And that is over a series of bars. I don't know how many. I never know how many. I just know what happens. I don't know how it happens, why it happens. I just know that it happens. And that is that price and that line are going to catch up to each other. Now, a test and rejection of a green line is bullish. Closing below a green line says there's more of a retracement. You have to look for other areas of support out here. So that level's at 1381. So that's what's going on inside the Russell 2000 for the bigger picture, for the daily picture. Now, I have been talking about counter trend rally out here. Why is Stevie talking about counter trend rally? Really simple. The simple reason is when we take a look here at the daily time frames here for our 4 different future contracts, 3 of the 4 of them are trading below the bottom of their profiles. It's why the number of 95.59 is so important for the NQ. Not there yet, okay? But the other 3 below the bottom of the profiles that signals a change in trend unless we see some other kind of bottoming signal. I don't see that just yet. If I take a look at the spot volatility index, what do we know? We know that price is above the 50-day exponential moving average. That number is 33.35. We're trading at 35.96. If price were to close below 33.35, that would change our signal. We would no longer, based upon the spot volatility index, be able to say this is a counter trend move. Now, you can give it that second day's action to make sure that price trades below that 50-day exponential moving average. But as long as price is above it, well, then we have the generally speaking clause out here. And that's the best that I can do for you. But it's a great generally speaking clause out here. Imagine those folks that just knew nothing about technical analysis, but they could understand on their charting tools that come with their application that they could put a 50-day exponential moving average on a indice that they very likely have access to, the spot volatility index, and they could just simply use that as a trigger to go long or go short. And the only time that really causes major problems when there's some jostling going around from one side to the next. But here, generally speaking, when the spot volatility index is above its 50-day exponential moving average, those would be the yellow boxes out here. The message of the market is that it is either bearish or neutral out here, unless you've found some kind of a bottom signal, which I don't have a bottom signal other than a test of support out here. So it's that, and it's a combination of the New York Stock Exchange advanced decline oscillator. And right now that is still below zero. So as good as this rally seems to be, it's just a counter trend move. If we go ahead and we use the spot volatility index and we use the New York Stock Exchange, you can see that the center, well, you can see the panel, it's labeled advanced decline oscillator. It is below zero. And when it's below zero, it is said that sellers are the ones in control of the market. And that's the deal. So that's the reasoning behind, and with prices trading below Stevie's green or red line on the daily time frame, all of those point to this just being a counter trend rally. And that's the reasons why. And I just wanted to really be able to point that out to you. Now let's go to some other requests and questions that have come in. I believe we've gotten through everything inside the Tiger's Den. So Pat S. writes in, and Pat wants, this is for the YouTube channel. Pat, thanks, Pat. Pat wants us to take a look at Exxon Mobil. And Exxon Mobil out here, what do we have? We've got a TD9 count top. So we can see that half a dozen sessions ago. And prices push its way, Pat, down to support. Its breakout level of support. Hasn't hit it exactly. It's not too far away from it. 44.37 is the number you're going to want to watch. Price below Stevie's green line. Below the bottom of its profiles out there. If there's a close below 44.37, Exxon Mobil is telling you it's ready to go back to the March lows. But at this stage here, it's got the bearish pattern, but key levels of support have not, and I really consider that TD9. What's going on there? The TD9 count, in my opinion, Pat, is the real key level that price would need to break to tell us about that change in trend and that it wants to head down to the March low. So that's what we see. We take a look at the daily time frame for ExxonMobil. You also wanted us to take a look at Occidental Petroleum. OXY is the ticker symbol. So let's go take a look at, see if there's any different message here from Occidental. This did not generate a topping signal, so to speak, although I'm sure there's an A to B equals CD pattern. And then we had the bearish reversal candle, this bearish separating line back here on June the 10th. But price hasn't broken through a key level of support out here, which are either Stevie's green line at 1814 or the bottom of its profile, right at about where it's trading right now at about 1874, 1875 out here. Watch 1814, Pat. If there's a close below 1814, Occidental Petroleum is sending the signal to you that it wants to get back to its breakout level of 1275. Below 1275, then this is headed back to the March low out there. So that's for the YouTube channel for the instruments that they wanted Steve-O-san to take a look at. Let's go to the next question. This one coming from Wayne. Your thoughts on timing or range for Shopify for this week? Any thoughts long-term, 2 months for Tesla? So we've already covered Tesla. And again, everything there was, caution signs, remember in Tesla, but nothing that's bearish, so to speak. In fact, more than so to speak out there. So hopefully I've covered Tesla for you, but you're interested in Shopify. SHOP is the ticker symbol. So let's go take a look at our 3 time frame charts out here for it. SHOP, shop. See what's going on here. And price, Wayne, is right now today trading above the top of its daily profile. So that would be bullish. That number is 776.07. Price is going to trade up into resistance. Well, in essence, it's already done that today. Also, Wayne, the top of the resistance level is 801.38. That's the top of its bearish structured weekly profile. This profile formed last week out here. Your question was, what's the range? So I'd have to say the range is you're going to want to watch 801.38. If price can close above that, well, then that would be pretty good. But if it doesn't, your range is about 801.38 right now to 726.70. The 801.38, top of the weekly profile. 726.70, the bottom of a bullish structured profile. I would say 716 to 726 becomes your range of support, because the center of the bearish structured weekly profile is at 716.14. So that's what I see when I take a look at Shopify, Wayne, and real quickly, any topping signal. It did have a wave number 7. That's at its high. So if price can take out that high, that would be very bullish. So there's a topping signal. Watch 801.38 for your messages. Steve Rhodes with TFNN with Raven.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive.
We take it every morning. Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So a number of questions. Let's see if we can get through this here. Tim writes in, and Tim says, do you believe that we hit a low, not the low, this morning in the S&P? If so, where would you say I should enter RSP? So you're looking to go long. RSP, I believe, is the equal-weighted ETF out there. You know, Tim, I don't know that I can give you any more information than I've already given, and I think you need to make those decisions based upon the way the ES Mini is trading. I mean, if I pull the RSP chart over here, there's This still has a Gartley sell pattern. There's your bear separating line, confirming that candle. Price below Stevie's green line, 105.62. No, I don't. Is it a low of this morning? Yeah, sure. But is it the low? No, it's not the low. And Tim, I've given about everything I can think of with regard to answering that question, especially the last segment. So Lee writes in, and Lee wants to take a look at FRO. So let's go I'm going to try to get these in here in the next minute. So here's when I take a look at front line, I believe that is. Price has found resistance at Stevie's red line at the high of the day. It's got support at 741 to 746 out there. Top with a TD9 count. Support is held, but so has resistance. So it's really kind of neutral, and I wouldn't know which way to trade this. I'd want to see either support get broken through to the downside. Of course, I wouldn't take a short on a $7 stock, or I want to see resistance fail, and that's Stevie's red line. And it has not done that. The next request was for CHW. That's okay. I don't even know what it is, but just what is the daily time frame chart signaling to us? Has a Rhodes momentum indicator top. Prices testing the resistance level of 25.31. This could just be a counter trend rally, but really trade in the range. Its breakout support, if you're looking to buy this, is 17.56 until the top fails out there that had the Rhodes momentum indicator top out there. That would be what I would be looking for, that breakout level. And the last one was PRSP. Let's see if we can do this in 2 seconds out here. We have a wave number 7. That's the letter G top. Price above Stevie's green line. Looks like this wants to try to get up to maybe 25.06. Once again, the top of its bearish structured profile. Folks, thanks so much for being here. Stay tuned for 2 more great hours. You got David White up next, Tom O'Brien to take us on home, and I'll be with you on terrific Taco and maybe even Thirsty Tuesday. Take care, folks.